As of today, the current economic downturn is quite disturbing, yet only a few of us are aware about the other market crashes in history. And so, this is The Financial Bridge, and in this video, let's hear some of Warren Buffett's thoughts on the 1929 economic crisis and how relevant it is to the latest recession, and what we can learn from it as well. But hold on, before we move forward, please make sure to give this video a like and subscribe to stay updated for more of our financing and personal investment content. But other than that, let's get started. The economy made a remarkable comeback, but many people were emotionally damaged, as seen by stories their parents told them. The year 1929 has become a cultural touchstone. In 1929, Warren Buffett's dad got a job as a security salesman at a small bank in their town. When the stock market dropped by 48%, he still managed to make a profit of individuals by selling them stocks and bonds. There was a time when people didn't want to go out and see the same folks they've seen in the past few months. During that 9.5-month period, or roughly before Warren Buffett was born, the stock market actually rebounded more than 20%, which he didn't realize at that time because the market was closed. In the fall of 1930, people simply did not think. To them, it seemed more like a recession, something that had happened at least a dozen times before, if not always. During a time when the stock market was quite significant, but also when many recessions had already taken place in the United States, so this did not seem particularly exceptional. For approximately a week and a half after he was born, the stock market really rose, rising by around 1% on average throughout that time. Well, after that, the stock market dropped from a high of 240 to a low of 41, which was a significant drop considering that if he had been given $1,000 on the day of his birth and invested it in the Dow average, he would have $170 less than 2 years later. That's something none of us have ever done. But if we had, we could have killed two birds with one stone. But in terms of variety, the United States has seen a decline of 83% in just 2 years, and a decline of 89% since hitting its all-time high on September 3rd. In the gap, which is less than a year after his birth, there occurred the astonishing year of 1929. His dad tried to close out his bank account at the bank where he formerly worked, but the bank required a signature after hours. The Federal Deposit Insurance Corporation, or the FDIC, was established on January 1, 1934, and although it was not given much attention by economists, he believes that things might have turned out differently. It was enacted as part of Roosevelt's comprehensive legislation, but things would have gone quite differently if the FDIC hadn't been around. Many factors contributed to the Great Depression, but Warren Buffett thinks that the smooth hole is mostly to blame. So many factors, including the margin requirements in 1929, contributed to the economic downturn. But if over 4,000 banks fail, it's 4,000 individual stories of people who saved and put their money away only to find that it was gone when they needed it. In his perspective, the FDIC is one of the best things to come out of the Great Depression. Without it, he is certain the world would look considerably different today. True, bank failures were widespread in this country, and those who thought they had savings only to find a closed sign when they tried to withdraw their money learned the hard way that they had lost everything. The Great Depression lasted a very long time indeed, but far longer in the collective consciousness than in reality as a result of the repercussions of World War II. Keynesian economics became the dominant economic theory. The world began accumulating massive fiscal deficits, which pushed the national debt to an all-time high as a share of GDP and hasn't been seen since. Even if the economy made a huge comeback, many individuals were still traumatized by Aaron's theft of their children's memories. The year 1929 has become a cultural touchstone. There was a remarkably widespread understanding of what Warren Buffett was explaining, and it reflected in the market. The first ever keto was created on January 4, 1951. In 1930, on August 30th, Warren graduated from college, but it would be another year before the stock market would reach its previous high. Keeping in mind that the United States was only 140 years old in 1951, consider the years between 1920 and 1929. 20 years of America's incredible 231-year history. It saw no improvement in the economy or the moods of its citizens. The American economy was worth what all of these firms were doing far, far much better than they were. The market has finally returned to a price level that is comparable to what it was 20 years before my birth, and we have no idea why it took so long. According to Warren Buffett, 1954 was the best year of investing ever, with the Dow Jones Index opening at over 280. The Dow rose from around 280 at the beginning of the year to just over 400 at the end of the year. And as soon as it crossed 381, it reached that historic level last seen in 1929. It was a different country back in 1954, so that seems highly unlikely. But that was the prevalent concern, and it reached such a level of alarm that Senator Fulbright, though Fulbright of Arkansas, who later became extremely famous in terms of the Foreign Relations Committee, really exceeded it. However, he included the Senate Banking Committee and demanded an independent inquiry. He legitimately questioned whether or not we had erected yet another House of Cards. In March of 1995, when the Dow was at 405, his committee gathered 20 of the brightest minds in the United States to testify on whether or not the market had gone insane once more. Even if the Dow was at 400 and we'd fallen into far worse trouble previously, that wasn't how most Americans felt. One of Warren Buffett's employees, whom he saw as one of the top 3 most intelligent individuals he has encountered, remarked about the Dow at 404 in both his opening statement and his written evidence. Since then, we have felt the full force of the American tailwind and the Dow, and he has claimed the stock market is high. Looks high, is high, but it's not as high as it looks. About 24,000 at that time the slide was created. You're currently observing a market that has returned 100 times its initial investment. The only thing all of us did wrong was trust an American, as Warren Buffett suggests so. All you have to do is buy a slice of America. You didn't need to subscribe to the Wall Street Journal, check the value of your stock, or fork over a ton of cash in fees. All you needed was faith in the continued success of the American dream. But you had this trial run from 1929 through at least 1954. As the resurgence of 380 in 1954 shows, you put America through its paces, and many people doubted its ability to pull through. But in the end, we proved that no obstacle is insurmountable. Simply said, this has always been the case. Warring factions of governments trying to locate one another might not have been the best test case. And the Great Depression and the present day might also provide challenges. Last but not the least, the correct response has never been against America, a statement that rings as true now as it did in 1789. This was true even within the midst of the Civil War and the Great Depression. And so, this concludes the end of our video for today. Now, what you have learned from Warren Buffett's thoughts on the current and 1929 recession. Do you agree with him, or do you have a different opinion in mind regarding this matter? Feel free to share your insights in the comment section below, and we'd be more than happy to join in the conversation. But besides that, we thank you so much for watching. If you liked this video, please make sure to give us a thumbs up and click the subscribe and bell button as well to stay updated for more of our recent and future uploads. Once again, this is The Financial Bridge, and we'll see you on our next video.